Hi everyone, let's go through my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the low time frame impulsive structure where we're still looking for wave 5 to the upside. And the reason I keep showing this scenario is to give you perspective on where we are on the chart when I jump into the micro scenario. So in this scenario, we expect another move towards the upside where wave 4 might not yet be in. And if this is the case, then if price moves towards the downside, this low over here is very interesting at 29.5k. Now usually the wave 4 of a higher degree is finishing somewhere around the wave 4 of a lower degree, which means it's going to end somewhere in this price action over here. And as you can see, price already entered that area. It also hit the 0.236, which is usually a minimum target for a wave 4. However, if it dips down once more, then we have the 382 here as well, which is a more common target for a wave 4. And we have that key level for maybe a liquidity grab and then a move towards the upside in a wave 5. It has to be said though that price did find support at one of our target boxes. It also first made a wick, then took that low once more for then the move to the upside, and we are creating some bullish divergences, which can be interesting, but more about that in a second. What you also see on the chart is the vertical lines, which shows that this range at the moment in a potential wave 4 is longer in time compared to wave 2. That's the blue fib time that you have on the chart. So the blue fib time taken from the high of wave 1 to the low of 2 to then the high of 3, where you compare wave 2 with wave 4 in time. And usually wave 4 is longer in time, which is exactly what you see. If we then go to the micro scenarios that are supporting this being a wave 4 and then looking for a wave 5 to the upside, this is currently one that I also keep my eye on, besides the more bullish one where we already expect more upside. So in this particular scenario, we're still looking for a move towards the downside in then a WXY, where wave Y is then a 3-wave structure to the downside, where the most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of this wave X. And what's interesting about the target area of wave Y is that it is in confluence with the low of that lower degree wave 4, right? The low at 29.5k for maybe that liquidity grab and then a move towards the upside. If, however, that support doesn't hold, we still have support at the 1.618 or just above the rare target for wave Y, which is the 1.618, which is the blue target box over here, sitting between 29k and 28.8k. Over here you see two vertical lines on the chart. One is the fib time where you compare wave 2 with wave 4, which I already spoke about, which is the left vertical line. But the one on the right, which I think is interesting to mention, is a fib time taken from the low to the high of wave 3 of that impulse that I just shown you. And then you double click over here. So you compare that time it took to develop wave 3 with the time it takes to develop this wave 4. And also these two have a time relationship, and you can see that almost price is now reaching the 1-to-1 time or fib time of that wave 3. So this wave 4 is almost the same length in time compared to the wave 3 in time, which is interesting. So if wave Y is gonna be in the making, then it's likely gonna be made after this second wave 1, which is nice as well in this particular scenario. Now, as mentioned, it has to be said, we already found support, price wicking below, and that might fit the potential bullish scenario where this is then the low of the corrective structure, so the low of wave 4, and then a WXY scenario where this is then a new wave 1, because we're looking for a wave 5 to the upside, right? And a wave 5 to the upside needs to be an impulsive structure. It's a 5-wave structure, which means that this move to the upside either is a wave 1 or potentially a 1-2-1-2-1-2 scenario. But as you can see, I wrote something on the chart here as well. So if this is the low of the blue wave Y, and we look at this structure as an impulsive structure at the moment for continuation in a wave 5, there's two reasons why I don't really like it from an Elliott Wave point of view. First of all, if this is a wave 1, followed by a 2, 3, 4, and then this is a wave 5 to the upside, and let me jump to the 5-minute here as this is important, then yeah, you could maybe count like a 5-wave move over here, which looks to be then an expanding diagonal, which is already a rare structure for a diagonal. Usually the diagonals, like leading diagonals as well as ending diagonals, are contracting diagonals. Secondly, wave 3 is then going to be shorter than wave 1 in length. So if I take a trend-based fib extension from the low of Y to the high of then potentially wave 1 to the low of then wave 2, you will see that if this is a 1, 2, 3, 4, 5 wave structure, this wave 3 didn't reach the 1-to-1 of this wave 1, which means wave 3 is shorter than wave 1, and we can clearly see this move to the upside is longer than this wave 3 as well. So it's difficult to think this is a 5-wave structure like this. So another alternative scenario is thinking this is potentially a 1, 2, 1, 2, 1, 2, and then another 1, 2. The invalidation for this is if price is going to take this low at 30.2k, because this is then the final 1-2 scenario, and now you really want to see a bigger wave 3 towards the upside. Price currently bouncing on the 786 Fibonacci as well. If you take a fib from the low to the high of then potentially that third 1-2, you can see bouncing right on top of the 786, which is a common target for a wave 2. So in this scenario, potentially then 1-2, 1-2, 1-2. However, this 1-2, 1-2, 1-2 is also an expanding diagonal structure. Now, preferably for a 1-2, 1-2, 1-2, a triple 1-2, let me call it like that, you want to see also again a contracting diagonal. So preferably for a 1-2, triple 1-2, you want to see a contracting diagonal, but that's not what we got. And the reason why is that in a triple 1-2, each impulsive structure and each corrective wave 2 is usually shorter in time because you go to lower degree Elliott wave. So this is 1-2, which is the highest degree Elliott wave. Then this is another 1-2 of a lower degree, and this is another lower degree 1-2. But as you can see, this final wave 1 is larger in time and length compared to this and this wave 1, and also this potential final wave 2, and then a 1-2, 1-2, 1-2. This wave 2 is also longer in time than this and this wave 2. However, this should be the lowest degree 1-2 out of the triple 1-2 that we have, and that's not really nice in a triple 1-2 scenario. So it's difficult to really find a nice impulsive structure in this scenario over here. However, sometimes Elliott waves are not very clear. We did find support on the target box as mentioned, and price is creating a little bit of bullish divergences over here, potentially in line with what you want to see. So over here, if we go to the bullish divergences, then we have a higher low on price, but a lower low on the CVD, which is a bullish CVD divergence. I'll show you the AGGR chart in a second, but we also had bearish divergences in the meantime. Now, the bearish divergences already played out as this was the target, and that's absolutely fine. CVD divergences, by the way, for the new people watching. More about that at the end. So the bearish CVD divergences played out as this low was taken, but the bullish one over here is still active, where the target is then this high at 31k. So that is quite interesting regarding the bullish micro scenario shown just now, where this is the low and then you're going to be looking for continuation. It's not the cleanest CVD setup, has to be said. Main reason being that we had bearish divergences in this move towards the up and then the downside. The most clean setup you can get as a CVD scenario is a move up, a move down without any bearish CVD divergences, but you do then create bullish CVD divergences. Now, if we then go to the AGGR chart, 50-minute quick refresh, then you will see the bearish divergences over here. Price creating lower highs on the chart, but on the yellow line over here, higher highs. So you can see with my cursor, if you look to the right, higher high on the yellow line, but also compared to the highs we had over here, a higher high on the yellow line. So lower highs on price, higher high on the CVD. There's absorption going on of market longs, and eventually we wash towards the downside. Now that one already played out. And if I then zoom out, look at the blue line, which can clearly be seen, where you then have a higher low on price, but a lower low on the CVD, which is a bullish CVD divergence, which did not yet play out, as this is the target at 31k. And if we then go to the 5-minute and we look very, very locally, then actually just now while recording, this CVD divergence also played out, where we had a bullish divergence, higher low on price, lower low on the CVD, and also lower low on the blue line over here. Also CVD, so a double bullish CVD locally, where this is then the target and this one has also been taken. So this one already played out. So the only one remaining at the moment is the bigger bullish CVD divergence. But then again, it's not the cleanest because we did have some bearish CVD divergences in the middle, even though these already played out. If we then finally go to the finished impulsive structure, so then this move, this sideways structure, is not a wave 4, but it's part of a bigger wave 2. Then over here we're looking at a finished 5-wave move, which is not preferred. This is definitely an alternative scenario for me, where wave 1 is in a bullish scenario, then like more medium time frame, and then a 1, 2, and then you're looking for a bigger 3. The main thing is that this corrective structure is for me not going down quick enough. Yeah, I want to see it going down quickly for a wave 2. Usually a wave 2 is a zigzag, which is a 5-3-5 structure. It can be complex, that's absolutely fine, but still it's taking a lot of time for price to move to the lower Fibonacci targets for wave 2, with the common targets being between the 0.5 and the 0.786. Rare targets 382, 886. Very rare is the 236, and that one hasn't even been hit. So definitely want to see more downside. And actually I already spoke in a previous video about this unlikely scenario, so I do think that if we move to the downside, it has to be part of, again, a bigger WXY where deeper prices are going to be reached, because this scenario just doesn't make sense. Any leading diagonal scenario over here, a 5-wave move, doesn't really work for me. And that has multiple reasons. First of all, this wave 3 is longer than this wave 1, which is not allowed in a contracting diagonal, and an expanding diagonal is a lot more rare than a contracting diagonal. Secondly, if you do put wave 1 to the right, which then means that wave 1 is longer than wave 3. That's very nice, but then you get a problem because this has to be a 3-wave zigzag. That's fine, because the leading diagonal can be all 3-wave structures, or it can be a 5-3, 5-3, 5. The main problem is that if this becomes a 3-wave structure in like an ABC, this wave C is way too short. It doesn't even reach the rare short target for a wave C. So that doesn't really make sense to me, which then means I move the wave 1 to the left. But then you get another problem in that a wave 2 and a wave 4 in a leading diagonal need to be zigzags, but this is not a zigzag over here, wave 2, as this wave 2 then needs to be a 5-3-5 structure, where wave B doesn't take the origin of wave A, but that is exactly what happened over here. The low has been taken, which is not what you want to see in a wave 2 in a leading diagonal. So yeah, there's many reasons why this is definitely not a scenario I'm looking for if this wave 1 is already finished, and I'd be looking at a more complex scenario where again then more downside is expected. And finally, we do have some news today. Yes, finally, might be some volatility kicking in at 3:30 p.m. Central East European time. We have a Mr. speaking over here, so there might be some high volatility coming. Make sure you trade safe around these times. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.